What's up? What's up? What's up, everybody? How we doing? Let's go. Welcome to the Pat Grace Real Estate Show. We on episode 8, and I'm telling you right now, tonight is gonna be different. If you're watching this live right now from Facebook, YouTube, LinkedIn, Instagram, don't move, don't scroll, don't put your phone down, because what I'm covering tonight is something that has made us different and completely separated ourselves from other investors, and probably the one move that made us wealthy, and a strategy that most investors have never heard of, most financial advisors will never teach you, and the banks for sure, they don't want you to know about this. And this is not theory. This isn't something I read in a book. This is something I live, and something my family has lived for 15 years. Something that completely changed the way that I invest, the way I handle money, and the way I've built my wealth, and how I've been waiting to share this on this show for a long time. And I'm excited to talk to you guys about this. Tonight, I'm pulling back the curtain, and we're going to talk about lines of credit. And before you say, Pat, I already know what a line of credit is, and we don't need, you're not going to blow my mind with anything. I promise you, you don't know it like this, and you don't live it the way we live it, and you're not doing it the way we do it. And so the way we use the line of credit strategy is like a lifestyle. It's a complete shift in how you think about debt, how you handle your profits, and how you access capital. And once you see it, you cannot unsee it. We own $63 million worth of property, and I have $30 million worth of line of credit, and not one single amortized compound interest mortgage. And tonight I'll show you exactly how that's possible and how you can start moving in this direction. And check this out. I'm going to show you guys real simple, give you some actionable items tonight on how you can pay your house off in 10 years, how you can access capital and access equity so your equity is not stuck in your portfolio and your stocks and your life insurance and your assets. And so if you're watching tonight live, drop a comment real quick and let us know where you watching from: Facebook, YouTube, LinkedIn, Instagram. Let me know that you're here. And if somebody in your world needs to hear this tonight, share this right now, tag them, send them the link, because this is the kind of information that changes lives. And most people will never stumble upon this on their own. So let's talk about, before I get into that, we're going to talk about the market here in Kansas City real quick. And I just wanted to go over this slide. Everything's still on the up in KC. Closed sales are up almost 8% from last year. And average sale price is also up to $383,000 in Kansas City. You know what's funny? People always ask me, Pat, should I wait? What should I do? And, prices continue to go up. And so waiting is not going to be smart. And so get in. The best time to get into real estate was yesterday. That's a saying. And you guys should listen to that. And so the median sale price of the properties here are $324,000. That's up. Days on market is also up. So the days of us selling these homes really quick is not happening, but 53 days on average, so almost 2 months. So, if you're watching the show and your property's not selling and you're, pissed off at your agent, give them 60 to 90 days. The percentage of list price is 97%, and we have pending sales at about 13,000. Inventory is down, so we've got less inventory on the market, and that probably has something to do with rates. And I think things will shake through here pretty soon. We've got a new Fed chair who's going to come in, and he's going to have to do a lot of favors for this president. And I don't know how long rates will stay low, but I know he's going to keep them low, and he's going to make them low here probably in June. And so you'll start to see rates drop. I think you'll see the market pick up. And what my guess is you're going to have we're going to be back to them days when rates drop, where you have multiple offers, highest and best, and people are going to be fighting for properties, and the prices are going to go up even more. And so I don't know how long he can keep it like that. We got inflation, we've got stuff going on that we really can't fight, but he's going to do something at least for the first year. And so get ready, get your financial portfolios ready, get everything ready to refinance, lock in some good rates, and be prepared, because you're going to have a market where you are going to be able to lock in some low rates here coming up in the next, probably, I'd say 6 months to a year. And what we're going to talk about tonight with the line of credits is something you can do on top of that. And so it's an add-on while you're getting started. So we'll cover that a little bit later. Let's look at the rent market here. The Metro single family snapshot on the rent market. The 3-bedroom house in Jackson County average is about $1,687. In Johnson County, you're looking at average $2,193. In Clay County, you're looking at $1,859 on average for the 3-bedroom house. And Wyandotte County, you're looking at almost $1,700. And so prices are up. I don't think it's going to get better. So get ready. I think prices are going to continue going up this summer. And I'm feeling it right now. I've got really 0 properties for rent in my portfolio of 200 something properties. My lady Barbara and Sheila, they're renting homes so fast. We don't even have them vacant, and they're already renting them. And so the market is hot right now, really good. Vacancy is about 4 to 7% across the metro. And so market is looking really good. Let's talk about World Cup real quick. We got some new news on that. You got 650,000 people supposed to be coming. We got 6 matches here at Arrowhead. And it looks like from June to about July 11th, there's a quarterfinal match. Another big thing is a lot of the matches that were happening in Kansas City, they've got this fee they got to pay to come into the United States. Algeria is probably one of the worst countries for overstaying their visa. And they got to pay like 15 grand or something, I heard, to come into the United States, which might affect the attendance here in Kansas City. And so, you've had 800 applications or apps filed. And the crazy part is, in Kansas City, I don't understand our government and what they do here. You've got all these people looking for places and all this stuff, and they allow only your primary residence to be a short-term rental. So everybody who owns rental properties, if you're not already in and you was trying to get in, you can't. And that's something to take a look at. But listed rates are up almost 270%, but bookings only rose 48%. So you got to play the patient game and maybe wait until last minute if you have some stuff. Occupancy is at 50% for the group stage. I know hotel rooms are still available. And so it's not like flying off the market like everybody thought. I've got properties on Airbnb, and I only can do 30-day. I can't even do short-term rentals, and my stuff's not rented either for the 30-day mark. So I've got a Facebook page out there called World Cup Housing. You can check that out, and if maybe you guys can post some stuff on there and get an alternative to what's going on. You guys can check that out on Facebook. Looks like the group stage probably per night about 191. The quarterfinals about 198 per night. So you guys can take a look at these statistics on the screen here. I don't know. I don't think it's going to be that big like what everybody was saying, but we'll see what happens. Hopefully it picks up. All right, real quick, let's talk about some sponsors real quick. We got the mentorship program. If you're interested in getting in, it's $250. You'll get tons of content, tons of online. You get access to a closed Facebook group, and really you get access to our network. If you need anything, questions, consulting, whatever you need, you got access to us. And so it's kind of just an entry level type thing. We'll talk about United Real Estate real quick. This is the 100% broker model for all the agents out there who want to make 100%. Here's what you guys need to be doing. Contact Marta. Full technology, full broker support, in-house online training, and we've got the most investors working at United. So deals are getting tossed around, stuff's happening in this company. I'm close to 400 agents now, and so company's growing. And as Remax just got purchased by Real and Chartwell and Coldwell Banker and all these places, I know a lot of agents out there are looking for a new place. Call Marta and interview and talk to her, because what we have is unparalleled and you cannot beat the deal that we have. All right, let's talk about this BDM program. This is more for people. You don't even have to be a real estate agent, but it works well for real estate agents. Roofers are another good one because they always are selling roofs and they need financing. This is a good way to get that done. But you can market the mortgage services. You don't need to be a loan officer. You get white glove service. We give you all the flyers. We give you all the content. We give you everything you need to market. And, we've got access to over 50 lenders. 50 states with over 200 lenders. And so, you get compensated as a W-2 employee. Everything's RESPA compliant. You can earn up to 50 bips or 50 basis points, basically a half a point. For you real estate people out there, a $300,000 loan, you can earn $1,500 commission just by signing up for this program. You could be an influencer, you could be an agent, you could be an insurance agent, you could be a roofer, you could be anything. As long as you've got access to a network and people, this would be another supplemental type of income here with our mortgage company. And so really simple. If you're interested in something like that, just DM us and we'll get you all hooked up with that. All right, let's get into this. All right, I'm super excited because tonight we're going to talk about lines of credit. And before we go any further, I want to say something that might surprise you. This is not complicated, and it is not some Wall Street secret locked behind some velvet ropes. This isn't out of reach. The tools I'm about to show you already exist, and they've been there. They've been there for years. Just nobody's using them correctly, and you're not thinking right. And so you already have access to them. Some of you are using pieces of it, but you're not using it to its full potential, and you just don't know. And so we're going to talk about something new tonight and how to use it differently. And the whole game is just one small shift. That's almost everything in life. Just one little tweak, one little twist, and things are different. And so everything is going to be real clean, real simple. Part one, the problem is sitting inside your portfolio right now, bleeding every single month without you seeing it. And I'm going to show you exactly what a mortgage is and what it's really doing with your money. And the numbers are going to make you sick. And part two, we're going to fix it. I'm going to show you exactly what I do. I'm going to show you how I structure my debt. I'm going to show you how I structure my cash flow. I'm going to show you how I move my money. And this is no theory. This is exactly what I do. For 15 years, we've been doing this. It's completely changed our lives. And so I'm going to give you the playbook with zero mortgages and access to all your equity, access to capital. You never have to go raise funds. A lot of people are sitting here raising funds and they got capital sitting right there in their portfolio. Part 3 is small specific things you can do starting today, not next quarter, not something you can do right now today. And so you'll be able to pull this off and start exercising this strategy in the next 2 weeks to a month. Before I go any further, I've got 2 questions for everybody watching right now. If you're live on Facebook, YouTube, or LinkedIn, drop an answer in the comments right now. Talk to us. I got my wife sitting out there. She knows exactly what's going on. She can answer all the questions. And another question I want to know from people out there, so we can kind of gear this to everybody, is like, do you currently have a mortgage on your house, a rental, a building, anything that has a mortgage on it right now? Comment in there, mortgage, yes or no. Question 2, do you have a checking account where you store and hold all your profits, your cash flow, your reserves, your rent checks, after you deposit all your W-2 money and after you get paid and you have excess money? Are you storing that money in a checking account right now? Hit yes or no. And if you're hitting yes, you're fucking up. We're going to fix it tonight though. All right. Mortgage, checking account, that's the trap. And I'm going to expose something and tell you guys what we do different and how we pay our stuff off super fast using lines of credit. One vehicle. And almost everybody watching just confirmed that they're sitting in right now. And I'm looking at this and they all have checking accounts and they all have mortgages. So we're going to hit you right now. I need you to see the problem clearly before the fix makes sense. So once you see it, like I said earlier, you cannot unsee it. Here's what I want you to know before we dive in. I learned this in Australia. So I went to Australia with my man, Dan Duffy and United Real Estate, and we stayed there for 3 weeks. And I figured out how these people bank and how they pay off their stuff. And when I learned this, I was like, holy shit, I gotta do this. I can't believe we're not doing this. And for the last 15 years, we've been doing this. And I just thought it was so elementary and everybody was doing it. And I'm figuring out it's not. And so we gotta fix this. And so I'm even in mastermind groups with big investors and they're not doing this. They don't even know about it. So I was so surprised when, I figured out that, in Australia, there is no 30-year compound amortized mortgage. And that's what every single American investor accepts. And it's the only way you guys finance real estate. And so we're going to fix that. In Australia, they don't do that. Nobody does that. They don't use it. They never did. And tonight I'm going to show you what they use instead and what I came home and immediately started doing. And I turned one commercial building into $63 million portfolio with zero compound amortized mortgage. I don't ever take mortgages. And so same assets, same market, same investors, just one small shift, one small tweak, completely different outcome. You guys ready? Let's go. Here we go. So check this out. 15 years, one strategy, 60 mil. I got $32 million a line of credit. Here's why you want to listen, because this is something I live. This isn't something I'm just talking about. I do this. And so right now on my portfolio, I have $32 million worth of line of credit. I've got 15 years of doing this line of credit strategy. And I've started all my companies. I've purchased all my properties, and I've done everything using this line of credit strategy. So this is why I want you to listen to me. And what if every mortgage payment you've ever made was making the bank rich at your expense. That's exactly what you guys are doing when you pay this mortgage and you pay this compound amortized interest. And here's how a 30-year mortgage really works. 1 month of a $300,000 mortgage at 7%, your monthly payment is $1,996. $1,700 of that goes to interest. Only $246 of your first payment goes to principal. And your remaining balance after you paid a $2,000 is $299,754. So 87% of your first payment is pure interest, and you don't even touch principal for years. And that's what needs to get fixed. And so the numbers, they don't show you. If you can get that slide up, Annie, on a $300,000 home loan, if you keep that loan for 30 years, you're paying $718,000 toward interest, or interest, or what you pay over 30 years. That's $418,000 in interest alone. Okay, so that's money you earn that you could take home to your family, that you could buy a couple houses with in Kansas City, that you could invest in the stock market. Gone. You can't touch it once it's in, and once you pay it, it's over. There's no getting it back. Okay, a mortgage is a one-way vehicle. You only can pay in. You can't take money back out. Okay, it's a one-way street. That's what I call a one-way street. Every dollar you put in reduces future interest, but you cannot access that equity without refinance or without selling. So most people keep their loans for 5 years, and then you know what they do? They refinance again, and they reset the 30-year term, and now they're back paying 87% of interest. And this is the trap that we're talking about with the amortized mortgage. Okay, and so what I learned in Australia 15 years ago changed my life forever. And a traditional 30-year compound mortgage over there is virtually non-existent. In America, we do 30-year compound mortgage. You pay 2.5 times of what you borrowed. Your money's locked in, and you got no access to your capital. In Australia, they put lines of credit against everything. Their house, their car, everything's in a line of credit. And so the biggest difference between a line of credit and a mortgage is compound interest. A line of credit is simple interest. The difference between compound and simple interest is this. I'm going to make it real simple. You ever stop to think how you pay off a $100,000 Escalade in 5 years, but you can't pay off a $100,000 mortgage or $100,000 to your mortgage in 5 years? The reason is simple. It's compound interest. It's great when we get it, right? In our 401ks and our IRAs, it's great when we get compound interest. It's the worst thing you can do is to pay it. And so paying compound interest is exactly what a mortgage is. And it's the worst debt vehicle you can take. And so with simple interest, we've got two-way access. And a line of credit, you got two-way access. You can put money in, you can take money out. The difference between simple and compound, if I have a $100,000 mortgage and I pay 10 grand to the mortgage, my next month's payment is still going to be based off of the 100,000. Where in a simple interest mortgage, if I pay 10 grand to the $100,000 mortgage, my next month's payment is based off of $90,000. And so it keeps recalculating and reamortizing. And the fact that, let's look at simple interest versus compound interest. We got the screen, we got it on the screen right here. Compound amortized mortgage, your interest is front loaded, right? Into every payment. So you pay heavy up front. You pay mostly interest for the first 15 to 20 years. All your interest is calculated on the original balance. So even if you pay in extra, you're not getting credit for it. One way, money can only come in on a mortgage. You can't get your money back out unless you refinance. You have a fixed payment schedule. There's no flexibility, and the bank profits when you make these amortized payments. That's why they want to sell you on mortgages. A simple interest line of credit. The interest is calculated daily on the current balance. I'm going to say that again, and I need you to hear this. Your interest is calculated daily on the current balance. Every dollar you deposit reduces interest immediately. It's a two-way street. You can put money in and you can take money out, just like a checking account. Okay? And it works like a checking account with a balance. That's exactly what a simple interest line of credit is. Completely flexible, no fixed payment, and your cash flow is working for you all the time. Let me see something here. So a line of credit is a two-way street, and your line of credit is a checking account and a debt vehicle all at the same time. So understand this concept here, that when you have a line of credit, your line of credit is not only going to be how you take your debt, it's also going to be your checking account. It's also going to be where you put your money and where you deposit your money and how you're going to pay things off really fast. Remember, when you make a payment to your mortgage, it's gone. It's only one way in. You can't get it back out. And the cash sits there, and you gain equity, but you don't have access to your equity. And the bank controls all your money. With a line of credit, I can put money in, my balance drops immediately. If I need that cash, I can go get it and pull my cash right back out. And that's why I eliminate the checking account. Your line of credit is your checking account, and you control all your money. So let's dive in and talk about this real quick. So what I do is I take all my debt in a line of credit. So say I owe $100,000 for easy numbers to a line of credit. I got income and rent coming in, all my cash flow. I got my W-2 coming in. Whatever my wife gets paid, whatever I get paid, all that money, we just sweep into the line of credit or into the $100,000 that we owe. So say we got 10 grand that month, we sweep it all in there. Now we owe $90,000. Our payment next month is based off of the 90 grand, and it's lower than the $100,000 payment from the previous month. And we pay all our bills and we do everything out of the line of credit, and our balance drops every single month. And if we need the money, it's still there. I can go get it. So I don't have to house all my money. There's a lot of people watching tonight with 50 grand, 20 grand, 10 grand, 100 grand, 200 grand sitting in their checking accounts right now, just wasted money. Could be you, if you had a line and you got equity in your house. And so I'm kind of getting ahead of myself, but I'm going to show you guys exactly what to do here in a little bit. But the line of credit is not only your debt vehicle, it's your checking account. So you'll start to pay every bill out of your line of credit. And instead of parking cash in your savings account or your checking account, earning 5%, 4%, if you're lucky, most places a half a point to a point, that same cash is reducing $200,000 of debt at 7% every single day. Whatever it is that you're holding at after you pay all your bills, say you got $2,000 extra or $1,000 extra every month, you could be sweeping that and paying down simple interest every single month. And this is the strategy on how we pay things off really, really fast. I'm going to give you an example. So here's what I did with this building at 511 Delaware, right in the city market. So when I went to Australia, I bought this building. We had owned this building and we were renting it out. And at the time, the building 15 years ago, the building was probably worth $1 million to $1.2 million bucks. I had a $300,000 mortgage on this building, and I had all this equity. And what I learned in Australia was, okay, let me take this to the bank, let them appraise it. They appraised it at $1 million bucks. The bank gave me a $750,000 line of credit, and I paid off the $300,000 mortgage. So now I have no mortgage, right? It's all paid off, but I owed $300,000 to my line of credit. I had $150,000 sitting in a checking account from cash flow from rents. The first thing I did was sweep that money right into the line of credit. And the reason I did that was because I still have access to it. If I needed the money, it's there. I can go get it. So I immediately eliminated my $300,000 line of credit. I swept $150,000 that was sitting in a checking account to it. Now all I owed was $150,000 on this line of credit. Now that property brought in $15,000 a month. I've got 4 floors there rented, and that property was bringing in $15,000 a month. And so within 10 months, I had paid this building off because all I did was sweep all the cash flow into my line of credit. And if I ever needed the money, say I've got to pay taxes at the end of the year, I'd go to my line and pay the taxes. But while I was waiting from January to December, I would put all that money in there and just kind of house the money in the line of credit. And so when I figured this out and I did it with one building, I was like, holy shit, I got to do this. I got to repeat this cycle. And so while everybody's doing the BRRRR method, right? They're buying, they're rehabbing, they're renting, they're refinancing. I kind of do BRRLOC. Is what I call. It's the same concept, except when you refinance into a line of credit. And real simple, when you talk to a banker, when you talk to somebody, you just ask for the right product. Don't ask for a mortgage. Tell them you want to refinance in a line of credit. And most times they'll give it to you. And so I'll tell you what banks that I'm using later on here, right here in Kansas City, small local banks. I'm not going to Bank of America, Chase. I'm not going to places like that for this type of loan. But they will give you lines against your house, Community America, Mazuma, all these places will give you lines of credit against your primary. Velocity banking cycle. So here's what you need, right? You got to have cash flow. If you're broke and you're not cash flowing every month, this strategy is not going to work. You got to have cash flow every month to sweep into the line. You got to have equity. Most people here, if you've been living in your house for more than 5 years, you definitely got equity. And so the first thing you can tap is maybe your house, life insurance, stocks. There's a bunch of stuff, rental properties, commercial buildings, apartments, you can, whatever. But step one is you open up the line of credit. Step two, once you have the line of credit, everything you're buying is basically cash. There's no lien on title. So if I have a $500,000 line of credit against my house, when I pay $200,000 for a rental property at the courthouse steps, it's all cash. There's no lien. Okay. And then I rehab cash. So if I need on that $200,000 house, if I need $30,000 or $50,000 to rehab the house, I rehab the house with my line of credit, which is basically cash. So at that time now I'm in the house for $250,000. And what I do is I wait till I get about 10 to 15 properties. And some people can't do that. I understand. You starting off and you can do one at a time. That's fine. You got to get started somewhere. But for me, I wait till I get about 10 to 15 of those free and clear properties. I package them up. I take them to a bank. They're all free and clear. I put that portfolio up to the bank with 10 homes. Say each house is worth $300,000. All I buy is up north, 2-car garage, Blue Springs, Lee Summit. Everything I own is 2-car garage. All my homes worth between, I'd say, $275 to $300. So in 10 homes, it'd be easy to get a $3 million valuation. And any bank will give me 75% against that. They're all free and clear. I take that line, I pay off my old lines. Now I got access to those lines and I just sweep all the cash flow into these lines of credit. And that's how I pay off all my debt in 7 to 10 years without using compound amortized mortgage. And so it's real simple. And so let me go forward here. Let me show you guys this. Let's move the next slide where we can talk about some actionable items you guys could do right now, real quick. Okay, so a lot of people answered today that they have houses with equity and they have checking accounts and they have cash flow. And so I'm gonna show you a little twist, something a little bit different. So follow me on this, okay? And look at the screen, take a screenshot of this so you can hear this, and then just rewatch this because this is something everybody can do right now. And this little, when you reduce the numbers and you make it smaller, it makes it easier to understand. Okay, so say we got a loan for $300,000 at 6.5%, 30-year mortgage. Okay, your monthly payment on that is $1,896. Okay, and say you was on that mortgage for 3 years. So you've been in your home for 3 years right now. Okay, the balance remaining on after you made payments for 3 years on your mortgage, you still owe $289,000 on that mortgage. Okay, and you got 27 years left to pay. All right, now say you got equity in your property. Okay, so say the property is worth whatever, 500 grand. All right, and you put the property up for collateral and you get a small line of credit. You know, say they give you a $50,000 line of credit against your primary house. Okay, here's what you do. Step one, you take 20 grand from that line of credit and you pay it to your mortgage. Okay, and when you pay the $20,000 to your mortgage, you now owe $269,000 on that mortgage. Okay, and your years left on that mortgage is 22.6 years. You just took off 4 years on your mortgage by sweeping 20 grand from your line of credit into your mortgage. 4 years gone, 4.5 years, okay, gone on your mortgage just by doing that alone. But you owe the 20 grand to your line of credit. So the next step is, instead of housing all your income, you know, in your checking account. So after you pay all your bills, you know, say you got $2,000 left, right? And right now you're sticking that in a savings account, you're sticking that in a checking account. You know, instead of doing that, you sweep that money into your line of credit, the debt, the 20 grand. So now after month one, you owe 18. After month two, you sweep the 2 grand in there, you owe 16. You'll pay the 20 grand off in 10 months if you just keep doing that. And the beautiful thing is, if you need the $2,000, it's there. You can go get it. Just go to your line, write a check, go to the bank, pull the money out. You didn't lose the money. You're just housing your money a little bit different. You're not using the checking account. The trap is the mortgage and the checking account. When you put money in a checking account, you're allowing the bank to go loan that money out. 10 times they can loan that money out. You put it in a line of credit, you're just paying. And so listen to what I said. You take 4 years off the mortgage. And if you have $2,000 cash flow every single month and you just pay that to your line of credit, you'll have your line of credit paid off in 10 months. And you never lose access to the capital. It's still there. You still have access to the 2 grand. So if something happens and you need to repair a car or you need to repair at your house, your AC needs to be replaced and you need 5 grand, it's there. You can go get it. You didn't lose any money. And so in this example over here, I use 5 grand, but I wanted to make it a little bit simpler for people. Not everybody might have 5 grand extra every month. You know, if you have 5 grand extra every month, you'll pay this off in 4 months. And you just took 4 years off your mortgage and you paid it off in 4 months if you had 5 grand extra. And instead of putting it in a checking account, if you just swept it to the line of credit. And so once you understand this concept and you just repeat. And so you take, you know, once the 20 grand's paid out, you can go back to your line now, grab another 20, pay it to your mortgage and redo it all over again. You know, or, you know, if you got, once you understand it, you know, if you got $200,000 line of credit and $200,000 mortgage, you might as well just pay the mortgage off. Now you owe $200,000 to the line of credit. If you got $5,000 coming in every single month, extra divided by 200,000, you'll have it paid off in 40 months. Crazy. 5 years, less than 5 years. And so this is an actionable step and something that I teach my customers and my clients to do. And when you break it down real small, 10 grand, 20 grand, it makes it easy to understand. But in something like this, you save 53 months, you get 4.5 years off your mortgage, you pay it off in 5 to 10 months, and the interest you paid in the line of credit is $362. Crazy. And so almost every asset you own can power a line of credit. All right. Your home equity. Let's go on to the next slide. The home equity line of credit. So your primary house is one of the biggest things you can put up for collateral and get a line of credit on your house right now. Your commercial real estate, you can get lines of credit against your commercial real estate. Your rental property portfolio, you can get lines of credit. You just got to ask the banker for the right product. They're going to try and stick you in a compound amortized mortgage, and because that's when they make the most money. But if you ask them, I just want a line of credit, they'll give you a line of credit. Okay, life insurance. Anybody got big cash value policy, life insurance? You got cash value, you put that up for collateral. In fact, my life insurance, I got maybe $6 million in my life insurance cash value. I've got that entire policy at a bank, and they give me 95% of my life insurance, and my rate is 5% on that line of credit. It's the lowest rate I have, because that money can never go backwards on the whole life, and it's the safest collateral for a bank. It's the best asset to tap with a line of credit. Your stocks, your brokerage account. You know, if you've got $1 million in a trading account, in a stock account, depending on how you invest, you know, if you're heavy in mutual funds and safe investments, they might give you 70%, maybe 75%. If you're all in stocks, like I am, really aggressive, they might give you 60, 65%. So you've got access to capital and lines of credit through your stocks. I'm gonna stay away from the 401k because I am getting conflicting information on that. I've had people say they can do it, and I have people say they can't. And so I don't want to give wrong information on that. But I do know for sure, because I have my primary house, every asset I own is tapped with a line of credit. Whether I use it or not, I have access to the capital. I have access to my equity. I have access, and I have a vehicle, and I have no checking accounts. I have 0 checking accounts. I deposit my money. I shouldn't say I have 0 checking. I have checking accounts, but I have pegs, what they call pegs on my checking accounts, where at the end of the night, if there's more than $5,000 sitting in my checking account, it automatically sweeps to my line of credit. And so I sweep everything, all my income, all my flips, all my real estate sales, all my mortgage, all my title, all my businesses, all my companies, all the profits, we sweep into these lines of credit, and that's how we pay shit off super fast. And we're not sitting here paying off debt for 30 years. Only, I don't know. That's just something that I've learned, and this is really what separated us from a lot of people. So look, 3 steps you can start today. Identify your equity, what you own, homes, rental, commercial building, life insurance, brokerage accounts. Any one of these can back a line of credit. Talk to your brokerage guy. I use Brian Palmeter at Raymond James. Call him up. He's got a line of credit on my stuff right now. And I can use that money whenever I want and to buy whatever I want. You buy in cash. I can get into other investments. I can invest in other people's projects. I can loan out money to other people. I can go to the courthouse steps, buy things cash. I can buy all my properties. All this stuff is all tapped by lines of credit. And number two, open your line of credit. You can, and I'm going to give you a tool that you can log into and you can work with us and get your lines of credit. You can go to any bank. You can go anywhere. The biggest, easiest one is your house, right? If you got a house and you got equity, a lot of you guys already have lines of credit. You're just not using it right. You didn't even think about this. And you're going to call me and be like, Pat, I got a line of credit already. Talk to me. I'll help you out. All right. So identify your equity, open your line of credit. And number three is sweep and deploy. Close your checking account and sweep all your money to the line of credit. You don't need a checking account no more. Your line of credit and your checking account is the exact same thing. To a bank, a line of credit and a checking account is the exact same vehicle. You can put money in, you can take money out. You can write checks against it. You can get checks against it. You can get a credit card. You can get a debit card. Everything's the same. And so there's no need for a checking account no more. You're going to sweep all your money into your line. And if you don't need the money, it's paying down simple interest. If you need the money, go get it. It's there. It's just like a checking account. It's the exact same vehicle. I'm going to show you guys something real quick. Let me see. I'm going to share my screen here. So you guys can see my screen. All right. I want to make sure you guys can see this. Can you guys see the line of credit website? I don't see it. Maybe I shared the wrong screen. Hold on, guys. Sorry about this. All right. Okay. Marta, can you guys see this on the live? Okay, perfect. I see it now. Okay, so check this out. PatGraceHELOC.com. You guys thought I was, I'm gonna sell you some shit. I'm gonna have you guys do it. But hey, this is a real easy way and a real resource for you guys to come access. I can do lines of credit on houses, on your primary, on rental property, on second homes. We can use this site really quick. We've got access to loan amounts between 25 grand and 750,000. All right. The system is real fast, 5 business days we need on something like this. Everything's online underwrite, soft credit check, super fast, super easy. 3 to 5 year draw period, depending on the terms. And we have all the product details are right here where you guys can see we've got 10-year term, all the options. We've got 10, 15, 30-year terms, application 100% online, everything here. You know what? I have to, yeah, okay. So you guys got all the terms in here. You guys just go to PatGraceHELOC.com and everything's in there. Super fast underwrite, and you guys will have options, and you guys can have access to your capital on your primary house, investment property, second homes. I've got the tool for you right here. And so if you didn't think I was going to come help you guys out, I got you. This is right here. Now check this out. Here's the one thing I wanted to show you guys is this calculator. So you guys can go to the website and you guys can start playing with this line of credit calculator. And is it pulled up on the live, the calculator? Yeah, I see it. Okay. So in this calculator, you guys can see and you guys can put in your scenarios on your rental property, on your commercial building, on your house. So if you have a house, that's 500, we'll just leave that in there. $500,000 is the value of your house. And say you have a current mortgage of 300,000 and your monthly take home income is, let's say, 10 grand. You're bringing home every month and your living expenses is $5,000. Now let's make more reasonable. Let's say $7,000 on your living expenses. You have a line of credit, say at 7.5%, and your mortgage is at 6.5%, and your term is 30 years. You can go to calculate my savings, and this little calculator will show you how you will have that mortgage or that deal paid off in 13 years and 2 months. Your total mortgage interest is 382. Your total line of credit interest is only 172. So look at the difference in what you take home to your family, your kids, new investments, more real estate, more stock, more you can buy. You're saving 210 grand by doing this line of credit strategy, and you have the house paid off in 13 years. And so this is a really good calculator to use. I have some other tools that we can look at. And so I just wanted to show you guys this patgraceheloc.com will be a good tool for you guys to go look at and check it out and use it. Let me see. We got this QR code if you want to scan for patgrace.com. And that's really the end of the presentation and what I wanted to kind of present to you guys. So stop paying compound interest, start living the line of credit life. I told you this was a lifestyle for me. This isn't something I do on one asset, or this isn't something I do, a part at a time. I mean, I live this. I everything I own is line of credit, and I purchase everything with my lines of credit, which gives me no lien on my titles, and then I can refinance those properties into more line of credits. And so, here's what you do next. Remember, audit your equity, your home, your rentals, your commercial, your life insurance. Connect with patgraceheloc.com. Get your lines going. We can literally have you money in 5 to 7 days. And if you're out of town and you're somewhere where there's no cash flow and you need a state where you need to buy property that cash flows, come to Kansas City. We got you covered. For 25 years, I've been creating portfolios, managing them. We've got vertically integrated systems here where everything's under one roof. I've got a real estate company with 400 agents. I've got mortgage and finance. I've got title. I've got construction. I've got property management. Everything you're going to need. We got all the systems and processes and 25 years of successful business running here in Kansas City. And so, is there any questions that I can answer real quick before we move on? Let me see if I can hear you guys. See it. Is there any questions that I guess Marta's been answering a lot of the questions as they've been going on. Let me see if I can pull up some questions here. See Marta answering a bunch of the questions there. Yeah. All right, guys. I think we're gonna end this thing. I'm hungry. I want to go eat. And um, episode 9. Hey, check this out. Episode 9 is going to be a viewer's choice. I want you guys to tell me what you guys want me to talk about, what you guys want me to cover, what you guys want me to go over. DM me, put it in the comments, put it in my DMs, and we'll come up with something. June 2nd will be the next show. Give me something good. I want to talk about something good. I want to see what you guys are coming from, where your frame is, where your mind is. So let's do that. DM me. We'll come out with some stuff maybe 2 weeks before June 2nd, a week. And, we'll kind of tell you what the topic's going to be about. I got the QR codes on the next slide for anything you're interested in. If you're interested in the mentorship program, United Real Estate, I got Company Cam up there, which is a great software for construction and managing all your construction jobs. Casey Cash Closings is my company that we buy houses cash. The BDM program is there. And so here's the QR codes. I appreciate you guys. Follow me on Facebook. If you guys aren't in Kansas City Real Estate Investment Group, this group's I've got over 60,000 followers in this group. It's the largest real estate investment group in Kansas City. And so every one of my friends who's a big wholesaler, a big seller, a big buyer, all of my friends, everybody's in this group. And so this is the place to go if you're looking for off-market properties, you're looking to trade, you're looking to buy, you're looking to sell, you're looking for roofers, electricians, plumbers, anything you need. You just put it in there. You'll get 30 responses. You'll get tons of responses. It's the best resource in Kansas City, and it's all free. And I created this group just to help people get started and not get stuck. Instagram is Pat Grace 25. YouTube is at Pat Grace. LinkedIn is Pat Grace. Follow me on the socials. Hit me up if you guys need anything. We do have consulting and coaching for those who need it on this line of credit stuff. Trust me, just get in, do it. It'll change your life. Once you figure it out and understand it, you'll never go back. And I can't wait to see what you guys do. I appreciate you guys. Aloha.